Well, as investors are decidedly glass half empty right now, shares of Starbucks are holding in relatively well, considering sales are declining for a third straight quarter and pretty sharply. Starbucks global sales down about 7%. In China, they were much worse than that, down about 14%. And even though we're seeing a bit of a pullback here, worth noting that it's a little bit less than the NASDAQ right now. And it's still importantly hanging on to this $20 billion surge in value that the stock accrued after Brian Niccol, the former CEO of Chipotle, was appointed the CEO of Starbucks. And it speaks to perhaps the goodwill that investors have around Niccol's ability to turn things around. Nick Setyan, not so convinced. He's got a neutral on the stock. He's an analyst at Wedbush. Nick, thanks so much for joining me. There's the results, and then there's the turnaround plan. Let's first start with the results. How bad are things at Starbucks?
Well, we had the pre-announcement, a couple of weeks ago, and so it wasn't that surprising that it was that bad. But the fact that transactions are down 10% in the U.S., the China comp down 14%, international comp down 9%, it does not look very good.
So this goes to the turnaround, and really, excuse me, Niccol's plan is to kind of go back to the basics, do what Starbucks used to do. Do you think it'll work?
I think if they're successful in implementing a lot of the things he talked about on a call yesterday, I think for the first time, since he joined, he did a very good job of articulating what the problem as he sees it at Starbucks is and what the potential solutions are. The problem is the solutions to me, involve big changes, right? In order to, what he's trying to do is really get the order times down to about, to below 4 minutes across almost every item, from, when you put an order at the POS to when you pick up the order across drive-through, across mobile order and pay, in cafe, the digital and delivery, and across all three, food lines that they serve, right? So that's hot coffee, cold coffee, and the food items. It's going to require, big remodels, repositioning of the stores, and he's also trying to bring back the feel of that coffee house experience that Starbucks has lost. So. I think he did a good job articulating what the solutions are. The problem is the timing is TBD, and so is the actual benefit when it's all said and done.
Are they also maybe not being clear in articulating a value proposition at a time where McDonald's, it's a different story, obviously, but they've got a clear value push, right? $5 meals. And I know they have their other issues with E. coli, but you've got to buy on McDonald's. And I'm wondering if Starbucks needs to do better on a value proposition.
They're actually going the other way. They're taking away a lot of the promotions that we saw, this quarter, which didn't seem to resonate with customers, and they're going to redirect those funds towards, marketing and telling the story of Starbucks. Sounds like he wants to do something very similar to what Chipotle has done, telling that story of, from the agricultural process of how that coffee's grown to the roasting process to how it's brewed, et cetera, et cetera. So I think he wants to go back to telling the story of Starbucks, to repositioning Starbucks as more of a premium player, and actually going away from a lot of the value offerings that we have seen this quarter.
And I wonder how much of the turnaround effort will be complicated by macro constraints. I mentioned the Chinese sales were disappointing, and it's really not just Starbucks, right? Everybody in luxury, we just had Estee Lauder today is falling by a record because of weakness in China. Are there limits to what he's able to do because of the macro situation?
Well, near term, his entire focus seems to be on the domestic, the U.S. Business. The international business has not. He admitted it. He's flying to China for the first time in early December. So, he hasn't spent much time thinking about China or really the global business outside of the U.S. His priority is turning the U.S. Business around, repositioning Starbucks domestically, and at some point in the future, he'll turn his attention to China and the rest of the markets. But they have also talked about strategic alternatives for China, whether that's selling the company-owned stores back to a licensee or potential spinoff. We'll see. Thus far, his entire focus has really just been the U.S. business.
I mentioned you had a buy on McDonald's. I'd love to get your perspective on that, because even though it seems like they're moving quickly through the E. coli situation, they said it's not going to have a material impact on the business. The Quarter Pounder is back on the menu without onions. The stock is still trading at around a 2-month low and has not recovered at all from the losses when this issue first came on the scene.
Well, look, I think McDonald's is doing all the right things prior to, the E. coli news. October, for the first 3 weeks prior to, E. coli, their same-store sales growth had accelerated to positive mid-single digits in this environment, including positive transactions. I think that playbook in the U.S., was working. They're doing all the right things. The question is, how quickly can they turn sort of the negative aspects of E. coli into positives, in terms of, okay, we were able to bracket this very quickly. This is not impactful over the sort of medium to longer term. This was only a near-term impact. But clearly, sales slowed post E. coli to negative comps. And the question is, how quickly can we all move past it, including the customer base? Is it by the end of Q4? Will it take longer, a year plus, like it did at Chipotle? I'm on the side of it's going to be a very quick turnaround. So, I'm optimistic that by Q1 of 25, a lot of the things that were working, that was driving a mid-single type of comp, are going to be back at play.